Hello, good evening, and welcome to another trading session analysis with me on Forex. And today I'll be touching on how to draw the trend line the right way. I've watched several videos on YouTube, on Forex websites, videos being pushed by Forex gurus. They tell you normally if you're going to draw a trend line, you pick from the lowest low, then you draw to the next lower high, this is how they teach you in the normal sense of drawing a trend line, but this is the wrong way to draw a trend line. The right way to draw a trend line is determining first the low. This is your low. We know fully well this is an uptrend. This is an uptrend. How can you catch the movement, the right movement, while in this uptrend? You can't really tell from all of this. So now you've determined your low. Now the next place you have to determine is where prices rejected, where higher and lower prices were rejected. We had here the first place, higher prices and higher prices were rejected, but it was broken by this candle. Then we had a rejection here at this point. At this point, prices broke above again, then came inside. If only as price came back inside and stayed inside, this would have been a valid price rejection. But no, another price rejection was broken, broke back into it, then broke above on this candle. So now this is where we had the next price rejection. You can see this candle broke outside it, came back into it, then this tested it. So you mark here, this is where our next price rejection was or is. Yeah, so we have this was where higher prices were rejected, broke out, came back into it, tested, then broke out into it, then now became a support here from a resistance. So now we are looking for where lower prices were rejected. This was the first place lower prices were rejected. Then this pushed it further, telling you, okay, at this point we don't want to buy at this price. Then you can see here this broke past it, telling you we don't want to buy at this price, but this candle broke below, then came back into it. So at this point lower prices were rejected, but prices moved back into this channel. The situation where it's broken and it moves back into the channel, that is where you find your price rejection, where people agreed not to buy any or to sell any lower, that they want to start buying. So you mark here. Now you have your high and you have your low. Now how do you draw your trend line? You have your trend line here. You pick from your lowest low to your point where prices were rejected. That's where you have it. So you have a move upwards, tested the resistance, came back, broke the trend line, closed in dojis, climbed back into it, tested it, then broke out of the channel here. So situation where you see a trend line going upwards and they tell you once the trend line is broken that a move downwards is imminent. No. Now you know the reason why prices move back up immediately after they've broken out of the channel, because this is how prices trend line represent price movement. Once they break below, once they find their way back up, they're going back up. Not you picking from your low to your next low like that. No, it don't work like that. So now in order for you to determine your entry and your exit, you can't do that with a trend line. Your trend line would only give you entry, it won't give you exit. Now you get this out, you go to your equidistance, you pick, you draw your equidistance to the next low, because it's a buy trend, right? Now you pick from here, you get out here. Once it's below the line, you pick a sell, you get out here. Once it's back into the channel, you pick, you get out here, like that, till we help here. So you can see GBP USD climbed back into the channel. Now it's going upwards. Now even to make it a bit better, you have just the lower, the middle, no upper band. You can have the upper band with your Andrews pitchfork. You pick your first, your second, your low, and your high. Remember, you always pick high when using your Andrews pitchfork, but when using your equidistance, you pick your low because you don't have a high. But what you now do is you adjust your Andrews pitchfork to your low. It must touch this low. You get it? Yes. Now let's go. We have you move upwards, came down, touched here, came back into the upper channel, was unable to break out, came back into it, broke into the upper channel, was unable to stay above the upper channel, then came back down like that. Now it's moving back up. So you can see GBP move. So many people are preparing themselves on Monday to actually go for a sell on this market. I don't see it selling anytime soon. In order to assert that it's not going to sell anytime soon, we could go a bit one step further. This was where the market broke out. We broke out of this channel with this move. This is where the low. You know how we start drawing our trend line or our move upwards. You pick your low. It's only the low that matters. Then you pick at where prices were rejected. At this point, price was rejected, but it broke below the price rejection, came back into it, but it bounced off here. Now it came back here. Now this is where price was. This is the next place price was rejected and broke below and came back up. So at this point, this is where the next price rejection is. Broke below, then closed back inside of it. So you pick your equidistance. You pick from the low to this point where prices were rejected further. You can see the channel came down, closed above, ranged, came down, touched here, climbed into this channel back, rebounded here, then came down here. Can you see it closed inside the minor channel that we just drew now? Closed inside, and if the candle or the market opens inside this channel, I don't see it selling. It might range then go up, because the price move now is moving from the major channel into the minor channel, and the minor channel supports whatever the major channel is doing. You can see here it just supported it, moved it upwards, then the major channel pushed it back down. Now the major channel has pushed it back into the minor channel. What do you expect it's going to do? Definitely your guess is as good as mine. So now to pick your trades, you can see this is the minor channel. This is what's happening. All of this that you can see here touched, closed back into it, went up like that. You can always pick your trades with those trend lines. You can see the range, closed on top of it, ranged on top of the major trend line, then move back up. Now it's ranging at the top. What do you expect it's going to do? It's going to touch, range a bit, then probably go up, except if the market gaps down. And you can see this indicator right here. This is a personal indicator I built based on this strategy. You don't have to draw all the trend lines and everything. It comes out and tells you where the resistance and the supports are and how the price moving. Of course, you can see here, 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 here. Now that is if you are trading based on the daily time frame. You pick your trades on your on the H1 as an intraday trader. Now this is a price move up. This is how you mark a price move downwards. This is USD JPY. It's been in a downward move for some time, and you can see it's just breaking out of the channel. What do you think it's going to do? It's going to come back up, test this midpoint, and go right down back, right? Because you can see it's been testing, then came back up here, and came back down. Check it on the lower time frames. You see it's the same as you find support, resistance, then broke below, then broke out of the range channel here, and on H1 too. So that's how you draw your trend line the right way. If you found this video useful, I would appreciate you subscribe and you share for those who have been taught on how to draw the trend line the wrong way. Share it with people and let them benefit from it. Have a wonderful weekend, and hopefully Monday you get to know how to trade right by drawing your trend lines the right way. God bless.